What's up, guys? How's everybody doing? We'll get started in a minute. Give me a quick sound check. Good afternoon, good morning, good evening. Happy Thursday. Almost at the end of the week. Not that it really means anything when you're out of a traditional 9-to-5 rat race. Looking forward towards that weekend, or looking forward to that weekend for some kind of reprieve and disconnect. I remember that life. Sound is good? Cool. I'll give everyone another minute. I just shared another link, and we'll get started. The market sucks right now. That's how I'm going to start. It sucks. Some trades here and there, but after a really strong move, this is to be expected, honestly. The market spends most of the time, statistically, the market spends most of the time, or I should say that what I'm about to say is backed up with statistics. The market spends most of the time consolidating rather than continuing to trend. Absent some kind of catalyst, obviously, this changes depending on what kind of environment you're in. If you're in a really strong bull market, you're going to spend less time consolidating. But being in a really strong bull market is an exception of itself. So let's get a scam pump kind of weekend. Maybe. All right. Welcome to the stream, guys. I appreciate you guys tuning in. It is just after noon. Make sure we have everything set up right. I just made some adjustments to my Cryptowatch template. So for those of you that have been in my Discord and go into that resource section, and there's a channel that's labeled Cryptowatch, Cryptowatch templates or something Cryptowatch, and I've made all of the templates available. So they're really easy to share on this platform. I click onto any one of my boards, and then I click share, and that's it. So from time to time, I'll make adjustments to these, and I will put the latest version in the Discord. And as a reminder of the Discord, it is completely free. There's no strings attached, no catches. You don't have to sign up using a ref link. It's just a completely free Discord. And I put it together because honestly, I got tired of answering questions, getting kind of drawn pretty thin between everything going on in my life right now, especially with a newborn. Where is a 3-month-old or 4-month-old a newborn at this point? I don't know. News to the world either way. But what I did, I figured I'd create a Discord, treat it sort of like an archive of all the things that I think are useful, sort of a knowledge dump, all the resources I use, the tools that I think are valuable, the exchanges, right? If there's any kind of bonuses available, I try to make those available to you guys. And all of the other things that I think are valuable as well that are not from me. Your best bet is to try to learn from as many sources as possible. And what I try to do is try to curate them to some degree, because Twitter, YouTube is very noisy. You got a lot of people that are holding themselves out as traders, as successful people in markets, and they're just marketers and they really don't have anything to show for it. So I feel like I have a pretty good eye for these things, as a lot of other career and professional traders do. And I've tried to, again, create a couple channels in that Discord that can be really helpful for people from, the very beginning, sort of introductory level to markets, even to the advanced. And again, it is sort of a dump of knowledge. So it's not like I'm in there, talking all day. There's periods where I go through periods where I'm in there and pretty active, and then I kind of just fall into the background a bit. But for anyone who has kids, I'm sure you guys can relate to falling in the background on a lot of things, right? Or putting things off. Anyway, okay, let's get started. First and foremost, nothing that I say in this stream is financial advice. Let's just get that out there. This is just how I look at the market, the lens that I look at the market through. It's my opinion. I make a lot of mistakes. I might have a string of losers. So if you're following me, if I'm actually announcing specific trades that I'm taking, which is not something I do too often on Twitter, honestly. A lot of people start thinking that they are accurate at assuming what trade I'm in, just because I'm kind of shooting from the hip and saying a bunch of things at once. I kind of just talk out loud on Twitter. But if you're following me, that's not necessarily a good idea, right? Because obviously you don't know my strategies, you don't know my tolerance for losses, how much risk I'm taking, and it's a bad idea overall to follow anybody. So none of this is financial advice, strictly for entertainment purposes only. And yeah, before we get started, shout out to Cryptowatch. Right, at the last 2 or 3 streams, I've gone over the platform in moderate detail. I'm still going to make a pre-recorded video just to go over things a little bit more directly, rather than being, my attention being pulled all over the place during the live stream, which is easy to do because you get a little bit distracted. But shout out to Cryptowatch. It's a phenomenal platform. As I mentioned, a lot of the OGs in this market, they use Cryptowatch website instead of something like TradingView. And if you go to the website, you see right away, like, people use TradingView because other people use it, honestly. And you're looking at, basically everyone use the same platform. You get comfortable looking at it. You get comfortable, following in their lead, and you know where things are on it. And you're used to if you're a Pine script, if you could write in Pine script, you're used to that, and you could write your own indicators, and it's something that everyone is comfortable using in this market, but it's not the best. It's not the best charting platform by any means. If you go to Cryptowatch's website, you see that there is actually there's more than just a chart, right? There's a bunch of stuff. There's correlation maps. You could customize that. There's market news. There's gainers and losers, your basic stuff like that. And then when you have your chart open, you could actually see that there's a depth chart, there is the order book, and there's a tape as well. So anytime you're looking at a chart, like if you're looking at, you guys see that I look at Binance a lot. And, Cryptowatch is associated with Kraken. Kraken is a phenomenal exchange. The reason why I look at Binance is not because I trade on Binance. It's because Binance is just under the total of all other exchanges combined in terms of open interest. So what happens on Binance, it influences price discovery across the entire market. There's a BTC on multiple exchanges, right? So I've said this before. It's kind of like there's multiple products in that sense, but they're all kind of staying in line through arbitrageurs and market makers, and if we're talking futures, then there's the funding mechanism to keep the markets in line. But in terms of what dictates most of the activity in this market, it's coming from Binance. So if you're looking at a chart on Cryptowatch's web-based platform, you could see the actual flow. You could see what's actually sitting in the book, the orders that are advertised and the bid and the ask. So all this stuff is better than just looking at TradingView. Again, people are just comfortable using TradingView. And even if you haven't started using a charting platform yet, if you see other people are using something, you're going to just kind of be like a lemming and follow them. And we know that following other people is not the best idea in really any other avenue of life, right? Following them blindly. So do your own research. Find the platform that you're comfortable with. This is a phenomenal platform. It has a desktop client, which is incredible. Like I've said, it doesn't really use any compute. I'm not a technocrat. I can't say much more than that, other than, I sound like a caveman. This platform worked good, and yeah. So shout out to them. If you're interested in the platform, which you should be, take a look at it below. There's 2 links. It's the desktop and the mobile. So yeah, I have nothing but great things to say about them. And that's what we're looking at right now. And then lastly, before we get into it, shout out to Bybit as well. They are another sponsor of these streams, so of my channel. Bybit has always been a great exchange. It is an exchange that I make fun of quite often because it is the home of the apes. It is the home of the top longers and the bottom shorters. Nothing against Bybit, though. It just means that is where the most degenerate sort of, I don't want to say anything derogatory, but that is where some of the crappier traders are in the market. Some of the better traders, but like I said, if you're buying tops and you're buying bottoms with what seems like sometimes considerable size, you're gamblers, then that's obviously not something that is going to work well for you in the long run. Anyway, so as I said in the beginning of the stream, I mean, it's like a shit past couple weeks. We've been, I think the last stream we did, we talked about, we had one micro composite that we were trading within that was back within, that was already within, we had basically gone from one wider range to a tighter range within that range. So we're trading within, I think it was like a 15-day long composite. So you're looking at like a 2-week range where price had established value, meaning, 70% of the trading, and in this case also 70% of the volume. So our presence and trading, so participation and presence, was done within like a $1,000 range. So a lot of times you'll see me talk on Twitter, I'll say points. For me, it's just that sort of terminology is coming over from trading legacy markets. When I say point for crypto, I'm talking about $1. So 1 point, $1, 1,000 points, $1,000. 1,000 depreciating US dollars. Anyway, so stuck within a range still. There's a couple things I want to go over. I don't want to try to predict what direction price is going to go. I mean, I sway from one day to the next, a little confident in maybe us breaking higher, a little confident in us breaking down. But while I'm doing that, I come to the point where I either hedge or I remove hedges, and I'm back to the point where I'm hedged. So what that means for me is like I've ridden this already from quite a distance. Like I said, I was in BTC a little late, not from the bottom tick of this move, the extent of this whole larger leg, but from 20,500. I picked up spot throughout the entire bottom. I was public with that, buying some spot here, buying spot, sending it to multi-sig. We're not talking massive size, but taking bites, right? But in terms of putting on a big positional trade, it's 20,500. So we're at a level where, for me, it's like the risk reward isn't there for me to hold through this level. I'd rather buy higher, with confidence that the market is going to move higher if we break above 30,000 and, begin to base out above there, buy higher, and that's the cost of doing business, or wait for some kind of pullback and see what, like I said, we're between a rock and a hard place. We're between two of the most significant contextual levels they're pretty close to. So 25,000 region, 24, 25 being that 9-month-long range. And then 29, 30K zone. It's never a specific price point. Being the most significant resistance on the chart, most significant supply zone. And it was the summer lows of 2021. So it was a major pivot. It was a pivot on our way back down that we retested. And we bounced and retested. So we got to show it some respect. That's my opinion. I know everyone thinks that the breakout trumps that. Yeah, I think bigger picture, the signs of health are there that the market has bottomed. But where we are right now, the risk reward is not in favor of just longing into the structure. So if you've been long, protect your capital, secure the bag. So there's a couple things I want to go over with respect to that. I said yesterday that this move is starting to feel like sort of a scaled down fractal of the bull market highs. And that's for a few reasons. I mean, it's not Sam this time and FTX buying BTC. Who is it? It's CZ, right? We have some celebrities getting behind BTC again. We have Jordan Peterson talking a lot more about BTC. We have Soulja Boy talking about BTC yesterday or back in crypto. We have Elon Musk sort of reigniting the bull spirit by changing the icon on Twitter to the Doge dog. And obviously that doesn't necessarily extend to all of crypto, but in a way it does obviously benefit crypto, and it's specific to Doge. So we have that. We have Michael Saylor buying BTC again, which is it's kind of a silly thing to reference because the guy's clearly he's a diehard, right? So he's going to be buying for a while. So we can't just reference his buys as any reason to be sort of reflexively bearish. But getting more active. We have a couple other things. Obviously we're at higher time frame. The most significant contextual level on the chart is sitting right above us. It's not below us, so we're still retesting that. So it is resistance until proven otherwise. And there's a couple other things. Let me think off the top of my head. Hold on one second. I think I might have written something on Twitter just in case I am forgetting the full description of my thoughts. Let's see. Saylor, exchange CEO, celebrity endorsements, Elon, and also reminds me of the highs when we were basing out at 60, 65. It looked like a consolidation that was going to continue to move up. It was very frothy. It's kind of scaled down version of froth right now. Everyone's talking about how there are no bears. And, the market is, we're talking about whether the market's going to 32, whether it's going to 35, whether it's going to 40 or all-time highs in the next few months. And you have some people that are like, oh, it's absolutely not going to all-time highs, but it's definitely going to 35. I could personally, if we're above 30, then I'll entertain that more. But it's the idea that we just keep talking about the higher prices. It's like, oh, it's going to come anytime. Like, yeah, we're just waiting right now. And it just reminds me of a market that is clearly sucked in any possible long, and people are just telling themselves stories to make themselves feel better in position. So if this changes for me, this can change very quickly for me if we're holding 30K, right? It's the fact that honestly we are having this type of trouble at high time frame resistance. And while this has happened, honestly, we've had some really great signs for bulls, right? We've broken out of that multi-month, 9-month long accumulation range, right? As far as bottoms go, that was great. It's great from a market structure standpoint, great from a sentiment standpoint. We had almost all major counterparties in this market carried out. So the path of least resistance at that point was up. Broke out of that to the upside, clearly acceptance above, no, immediate deviation and trouble at that level. Like we haven't come back down to test that level significantly, which is what you get in a strong move. Like you don't get a pullback, you get a consolidation most of the time. So people are waiting for the pullback to the level, and it just doesn't happen. It happens in textbooks. In a really strong trend, you don't really get a pullback like that. You get a correction sideways. Or the market, as Soros has said this before, the market can correct upward. You have enough buyers coming in to absorb any sellers. You don't really get any kind of significant pullback. As this is happening, we have futures trading the way we would want with respect to spot. So you can actually see above right now, we have Kraken, we have Coinbase, Binance, Spot, OKX Spot, and then we have perps. And what you can notice is that perps are trading at a significant discount. So Binance specifically is trading at a $31 discount to Coinbase. Coinbase is actually trading above Bitfinex. So these are all good signs. It's not like the New York session is doing anything. Yeah, I know. We're only looking at order books right now. I'm just going on I'm talking everything out before we look at the chart. So it's not like the New York session is doing anything for the market. There's a good amount of activity that comes in during the Asian session, which is interesting. But Coinbase is still trading at quite a premium to the entire market. So we have a case where the market is basing out higher. We're correcting against, again, very significant supply zone. But you would really be able to seal a bearish argument for that retest being something that's going to correct further and be unable to pass through if the futures were trading much more frothy, right? They were trading at a premium to spot. We had funding getting completely stretched out continuously. It's just not that case. It's actually the opposite. It's the case that while we're moving sideways in dips, the market is going negative or funding is going negative, and sellers getting caught offside. But it's an insignificant amount, and it gets corrected very quickly, almost right after those shorts are liquidated. So you have funding going negative, predictive going negative, then funding going negative, and then you get sort of small buildup in open interest. The market targets that, penalizes them, squeezes those shorts out, and then immediately that premium or that basis is closed out. So what you would want to see is this continue and open interest remain elevated and the market continue to fade this, which is not necessarily the case. And then lastly, there's a pretty large spot seller in the spot market. So we've seen that Binance actually was spoofing a couple days ago, and I shared this, and this is where a chart like this or order books like this would be valuable. Binance was displaying like 27 million and then 29 million right below. And we're talking within like a 50 basis point range of the best bid, best ask. So right here, right? So 50 basis points below that, you have basically $50 million on the bid to buy BTC. And obviously they didn't have any intention of buying BTC. If the market came back to that level, hiccups. If the market came to that level, they would just remove, and they were flashing in and out. And a lot of times when you see this, it's just a spoof, right? What they're doing is inspiring some kind of confidence in the short term just to fill their orders on the other side, whether they're perps, whether they're filling a sell order in the futures market, or if they're using the spot, if they're using the perp bid to fill a sell order in the spot market, right, to get out of their positions. So this was persisting for a couple hours. Market actually marked down a bit. But then as the market has moved back up, we've seen absorption. If you looked at some of the order flow activity, you would see that there was a lot more buying coming in. Sorry, my dog. A lot more buying coming into the market than was being rewarded. So you had more volume coming in, more buying coming in, a higher positive delta, but instead of the market continuing to move up more than it did the last time on less buying and less volume, you actually put in a lower high. So signs of high time frame absorption. Now, last thing I'll say is that there are rumors that it is Jump that is selling their position, selling ETH, selling BTC. And someone might say, well, why are they doing that? That can't be bullish. And they might immediately think that clearly this has to be high because a very large counterparty is selling. If you're anyone besides a degenerate like 3AC or a retail trader, if you're a fund, if you're a larger asset manager, and you've bought ETH at 1,000 and you bought BTC at 17, you are it's almost guaranteed that they are going to sell, right? They're going to at least take half of that position off or the entire position off on a 2x. Like TradFi money, right? So traditional market tourists that come to this market, so your hedge funds, your asset managers that have positions in crypto and maybe a small portion of their portfolio, they're going to rebalance and they're going to take profit. They're going to take profit at a 2x. They're going to take profit at a 50% move because that is an incredible move compared to what they're getting across other markets. So if you're Jump and you're still diehard in crypto and your major participation, well, it's crypto ARM that we're talking about, that kind of profit from a move like that is not something they're just going to risk, right? They're not just going to like let it ride through the level. So instead, what Jump would likely do is, or if this, this is speculation, but it's what I'm hearing, it tends to be pretty accurate from pretty accurate sources. They're more likely to buy back in above 30K if depth improves and the liquidity's there and it's clear that the market has found a base and is going higher. Other than that, I mean, this is the most obvious level to sell, and it's a smart thing to do for them to take that positioning out. Again, they're not degenerates. These are professionals, even though we've seen Jump in particular do some pretty dumb shit. Anyway, let's get into it. We'll look at BTC. Sorry for that long introduction. I wouldn't say it was necessarily an introduction, but I did want to go over some things. So real quick, though, one thing to point out, actually the opposite behavior is happening now in the book. So I was just watching earlier, and it looks like we have that kind of spoofing behavior taking place in the offer. So it wasn't incredible size. So large size was last week 27 million, and then another 20 something million, and you have in total 50 million to buy. In this case, it's like 5, 10, and it's within 20 basis points of price, and it's in the offer, and it's a spoof above, and it's probably a spoof. They probably don't want to get filled. Otherwise, they wouldn't advertise that. They would use something like an iceberg or just get out with a TWAP or who knows, whatever method they would use, but they wouldn't advertise that positioning. It's going to scare the market down. And I'll talk about an iceberg in a second because I got a Doge based on that. But we're seeing that in the offer right now, which might be, and it's not there right now, but it was there earlier. Hey, maybe this is someone trying to fill their bids below, whether it's spot or whether it's futures. And, that's the same, I don't want to say manipulative, but it's, you're trying to influence the market. That's the same behavior we saw on the other side of the book, like I said, earlier in the week and last week as well. What's happening right now, honestly, there's not a whole lot that's happening. I mean, if we look at, we'll just go to this chart real quick. If we look at the TPO chart, as I said, price is ranging within a range that it's been within we're going all the way back to March 18th. So we haven't done anything significant. The level that we're looking at, we'll go back to Cryptowatch actually. The level that I have marked off should still be there, honestly. We're still in it. So if we back up out of this, let me just expand this a little bit. So for those of you that were watching the last streams, you know, I was talking about this value area. So this box that you're looking at, I mean, if you're a bull, you want to see that this level is holding as support. So this 28,300 level. So that's a value area high of this entire range. We had a little micro composite sitting above it. Don't get confused in me saying micro composite. You're not going to be able to look that term up. It's just me referring to a smaller composite. So briefly holding the top side of that structure looked like we were possibly flagging before a move up, but we're just back within value. So it's not an area where you really want to get in position with any kind of conviction. You're in a very accommodative area in terms of liquidity. Like, it's easy to get in and out of position comparatively to the highs and the lows. Doesn't mean that the market's very liquid right now, but the risk reward is not there to define any kind of trade. It's easy to get caught flat-footed. The market is just chopping around. So for me, it's, again, I hedged. I'm glad to close that out. If we put in something strong, you know, some kind of constructive price action above 29.30, at least, you know, outside of this range. The point is, I mean, we don't even have to keep it as a value area. Specifically, that's how I look at things, right? I'll use the TPO chart to form a composite, but I mean, it's clear that the market has just been ranging for going on almost a month now. So even if you go back to 2019, I mean, and you're using that as sort of an analog for what this move is going to do, that move sideways for a period, sideways but drift up, right? So sideways but slight positive drift for, I think, a period of 1 to 2 months. So, you know, it took a while. And after a strong move like this, I mean, I talk about this on the lower time frames when we talk about large impulses on the daily and how you're looking at 2 to 3 days of consolidation and range and balance. So this is just a scaled up version of that activity, right? Big move up, needs to cool off. You have people right now looking at RSI showing that it's cooled off. You don't need to. It's just the price is clearly just cooling off. It's not going anywhere anymore with any rate of change. So 28,000, this is 28,007 for basically the highs of that structure, 26,852. We're looking at a 4-hour chart. If you go onto the daily, it's a lot of different ways you could cut this, obviously, is my point. 28,041. My value area was at 28,003. And then the lows were at, I believe I had them at 27,002. But the point is, we haven't left that, right? We're still stuck at the higher portion of this structure, higher end of this range. But I don't know. It doesn't do anything for me the way it currently sits. What's happening is you're just getting people chomping at the bit. So for this move up, so just the last 3 days, all we've had was shorts get caught offside, longs get caught offside, and it's been pretty easy to spot if you just looked at something like Binance open interest and Binance order flow data. So if we go to Binance real quick, just looking at going back to the third, so here's the price action we're looking at. Here is the funding. Here is the predictive funding. And then here is the open interest for that corresponding market structure. So as you can see, we're getting a significant pickup in open interest. So we're looking at 5,000, 6,000 BTC. A lot of buying coming in. So that Binance perp delta closing. So the difference between that spot market and the perp market, so the futures, getting this is a lot of aggressive buying coming into the market. And that occurred at 28,600. And we ended up cleaning that out. So you're just getting positioning trapped into a pocket. The same thing's happening. It's kind of happening right now, honestly. We're having this sort of rounded correction. It's not like a rounded correction, but as that's happening, open interest is going up. Funding is really coming down. Funding is beginning to go negative again, I believe, on Bybit and Binance and across multiple exchanges. So, I mean, what's going to happen now? I mean, it looks like, honestly, there's a possibility for shorts to get caught offside again. And you're just getting people that are overcommitting to moves that are really not that significant. You're getting a lot of people chopped up in the timeline. I mean, I've gotten in out of hedges probably 2 to 3 times at this point. But the market hasn't really done much, but my confidence goes in and out. And that's completely natural. So you could say it's a bull flag. You could say it's a distribution. And I could see how people could make cases for either situation. In terms of just lower time frame activity. We'll just go back to this real quick. Let's look at where BTC sits. We're right back at the open right now. So this is that little green dot is the open. But our move yesterday, right? So move yesterday, we'll open this. That was that. That was what I was just pointing out. Look at the open interest for that. Open interest picking up into this move. This is on Bybit, but you'll see that if you were to look at, where's the delta? Here we go. If you were to look at delta down here, so there's a good amount of buying coming in, open interest going up. But this is not the good chart to look at because Binance actually had a much more significant increase in open interest. Obviously, it's going to be where most of the activity comes in. But if you look at the TPO, reset, much of the volume, you know, the POC for the TPO and the POC for the volume profile, all of that coming in above the last 3 days highs. So you had, again, market has been ranging for, this is 1, 2, 3, 4, 5, slight drift down, right? Slight drift down, and then move up. Looks like it's basing out, capturing a bunch of longs offside, and then we just rinse back within the last 2 day range. So are there really any positions to cleanly define? You know, if you could make a case right now for, we opened up within value, right? The market has put in a good amount of activity below yesterday's value. If we're able to trade above today's highs, so if we're able to reclaim something like 28,002, then yeah, we'd probably fill out this low volume region, right? Just from the amount of activity we're having coming in down here. So the amount of, we'll just say short open interest coming in down here, it's not really taking us anywhere. You know, we've auctioned lower. Now we're back above where most of the volume came in, most of the activity has come in. And we were unable to break outside of what was like the last 2 day or 3 day composite. So we basically, if we just combine these, basically just traded back down to the last 3 day composite value area low. So unable to move back, well, excuse me, unable to collapse lower. Instead, back within that, you can see we're trading at the highest volume region within the last 3 days. So that volume point of control. If we're able to get above that, then that makes this setup, I guess, a little bit more actionable, right? We have a good amount of open interest that's come in here. Looks like on the short side, or mostly short aggressors. Again, this is outside of yesterday's value, but within a multi-day composite. If we're able to trade back within yesterday's value, we're back above today's open. So we go from a red day to a green day. All of this is a green day. No, a red day to a green day. All of this becomes the wick. Then we're above where most of the volume came in for the last 3 days. You just have a good amount in your favor that this will probably slingshot at least up to this naked point of control. So what that looks like is, sorry if that was sounded confusing. I know going between these is tough. I apologize. I know these streams, I started, this is like 2 weeks ago or 3 weeks ago now. I started trading during the streams, and I said my streams are just going to be trading moving forward. So it's taking a little bit of time to get the DOMs integrated on Cryptowatch, but after they're integrated, we're going to get back to the trading streams because, as I said, I can't be bothered to just talk about the charts. I know that sounds kind of, maybe that sounds kind of dickish, but I don't know. It's it feels like it's, you know, when there's nothing going on, there's almost no reason to even go over this stuff. But here's what this would look like. So here is today's open, right? So this is today's session open. So this high, the setup would ultimately be trading back above today's high. That would put us back above the composite value, composite point of control, and then back into yesterday's value. And what this is sort of right now, what this TPO sort of looks like, said that backwards, is let me get my drawing tool on. Where is it? One sec. There we go. Wrong ink color. Sort of a double distribution, right? I mean, that could be looked at as a double distribution if that's one setting, right? One session. But the point is, from a market structure standpoint, what sits ahead of us is the same thing that we would have. The same way we would define it, a double distribution setup is kind of available to us right now for the break above today's open. So here's that high. Wait, where is, no, this is, sorry, this is today's open. But here is what would look like a double distribution setup, right? Lower volume region, came back and filled that out a little. So it's not exactly a clean double distribution. It's filled out. You can see that in the TPO profile on EXO. But the point is, above that, and you probably have a pretty clean shot into this range again. So let me get a specific on that, because that is 28,000. Today's open is 28,148. That naked POC is, well, the VPOC is 28,546. So what we're looking at is basically something like this. Good amount of open interest came in here, trapped, what looks like trapped. All of today's session right now would be sitting below us. We would be back above the volume point of control from a 3-day composite. So that was right around the same region that we're interacting with right now. If we're able to trade back above that, this is not a true double distribution because it's not separated by singles. We had a little bit of time and development here, but I think it would offer the same setup that a like a pure double distribution setup would. Sorry if that confused anybody. I know not everyone knows what setup I'm talking about, but the point is, when you have, I'll find one on a TPO. When you have a profile that is separated by singles, like these, right? So this is a good example of that. This is a double distribution. Single prints right here. Two areas where value had been established briefly and then moves quickly with conviction to the other side. When you base out below these singles, in this case, reacceptance into these singles is usually going to lead to a pretty quick move to the other side, right? So in this case, it looks like just a small trade, but what happened down here is you have a good amount of activity coming into below the last 2-day lows. You have more activity built up again, sort of like today. So you have a good amount of open interest that is on part of sellers slamming into this. When you trade back above them, you're looking at usually a bigger move than just closing this gap. And what happens is this is unchallenged positioning, as I said many times before. This should be the area that cuts off price. So if we have a double distribution setup, this should be the area that shuts us down and sends us packing lower. So if you get shut down here and then the market is able to cozy up through there again, so we'll expand these as this did. So here is your low volume region, right? So your low volume region is basically, you could, I mean, this is the single region, but this entire region is the low volume region, right? Where price didn't do much, didn't spend much time, moved pretty quickly through. It's kind of a gap. So if you come up into these singles again, and then don't reject and continue, and instead you might have a rejection, but you're starting to build value in that. That's acceptance, right? And then you're just going to start looking at higher targets. So the point is, this is a more filled out version. It's not a gap. It's not, it's not single prints. This is not a pure double distribution, but we didn't spend a lot of time there. We didn't spend a lot of time there in the previous days. If we're able to trade back above today's open, then I think we would just fill that out. So again, quick trade opportunity exists below there. I'm not going to change it up. I mean, I said the other day that 27.5 is the level to protect below us. So 27.5, we've bounced off of that level already. So we wicked actually lower than that. If we're going to trade below these lows again, so if we look at just the last few days, one more. Whoops, that didn't do it. It's 27.5. So rather than me fuck things up, if we're going to trade below 27.5 again, $27.5 is right here. I mean, that is the lows. Excuse me. I just drank tea this morning, so instead of coffee, so my mouth is really dry. If we're going to break below 27.5 again, I think we end up revisiting this little consolidation. And there's a naked POC in there right around 27.10. Maybe we bounce off that briefly, but I think you end up coming back down to the extremes of this. So in the 26s again, below 27. That's if we break below 27.5. I mean, 27.5 is kind of mid-range for BTC right now. For the entirety of this range. So if we just put a Fibonacci on this, it's higher than that, excuse me. Where we sit right now is around mid-range. So again, not the best area to try to get involved. But you'll have traders that rather than wait for 27.5, they will start selling failure below this. And I could get behind that, honestly. Like if we start just melting into this low, so I guess a better way to put it, if we're saying, or I'm saying that there's the possibility of us squeezing these sellers, right? So they're hammering the bid here. There's a good amount of open interest increasing on that. Again, just to reiterate, this is from yesterday and into today's session. So it looks like it's around 6,000 Bitcoin of risk put on. That there's a case to be made for that being squeezed upward or that being squeezed out. If instead, honestly, I mean, if that is the basis for that setup, right, or the firepower that could help us with that setup, if instead the market is now continuing to drift back below these lows, then those sellers are clearly on side. So there's whoever provided liquidity to them. So whatever buyers bought this passively, market makers and just directional traders possibly. If we're trading back below where that activity was, right, where most of that open interest came in, then there's no real case for shorts being in trouble, right? Then you probably just look lower for this anyway. Any longs that took that, any longs that bought mid-range are part of that open interest because, again, open interest is, it's one side opening and the other side opening and them creating that increase. It's not going to change for one person closing and one person opening. So that risk that was put on, if we're trading below it, then clearly longs are in a worse position and sellers are fine. And you're looking at probably a long squeeze that takes us back down. So again, not a whole, listen, I'm sorry, it's not going to be an exciting stream. This is a crappy setup to begin with. It's actually really reaching to say it's a setup. There's nothing really attractive for where we sit. We're just waiting for this to resolve outside of this range, whether it's higher or lower. Yeah, thanks, Hans. I said I guess one of the last streams I did like this where I wasn't trading during it. I was like, I get tired of these streams. I feel like there's no value add by just, you guys know how I trade by now. I feel kind of redundant going over the same things over and over again. It's not exciting. I know that there might be new people watching the streams and that's helpful to them, but I've put together a good amount of information for free that they could start from and sort of catch up with. And I think the biggest value add is honestly trading live, like seeing execution, thought process. For some people, it's seeing how I could easily take a loss or I get in a trade very quickly again after being stopped out, and how there's those little details that you could communicate them, but unless you see them, it doesn't give you the same effect. So Cryptowatch is working on that side of things, and ideally we'll get that up and running soon because that's what I want the streams to be moving forward. And apologies, I'm not sounding like complaining to doing this stuff because I still elect to do it, but it feels like every person who trades and streams, they go over the same things. And if you go over the same things over and over again, you kind of get tired of it yourself, right? I don't arrive to the chart every day and say the same things I'm saying on the streams, right? I pick the little details up very quickly. I brush over some things that maybe are not necessary for me to take a position either way. And, you know, I either have a trade or I don't. And, you know, the streams are just they could be very monotonous if you're not trading during them. So I want to go over something real quick. I got out of Doge. Elon switched the Twitter logo, obviously. You know, is it a long term? Is it like an April Fool's joke that he's going to play to the end of April? That'd be stupid, but it wouldn't be surprising. Um, I I don't know. I've seen a case for. I mean, I could think the same. I could come to the same conclusion as well. You know, would Elon want to do this? You know, with the way the SEC is with respect to crypto right now, and how everyone's on his ass always. You know, would he want to put himself in that position to play with the market? You know, and arguably hurt people by just switching the logo to Doge to, you know, pump Doge and then to take it all back. I mean, could that put him in hot water? Yeah. At the same time, like, does Elon really come across as someone who cares? No, he actually comes across as someone who wants to do things sort of antagonistically, or, you know, to get a reaction. But either way, there was a one night, maybe 2 nights ago, where they switched the Doge logo back to the Twitter bird briefly. The market sold off 3%. So I had a decent amount of trades that I took just based on that. And I say decent, like I must have scalped Doge for the entire day at one point where I didn't take really any BTC trades. I was just trading Doge. So I've already made my money trading Doge. I don't need to buy and hold it if it's just Elon playing a game, and we're looking at a longer term period of sideways anyway. So I was holding spot though. I was trading. I figured I'm adding spot until I started seeing someone iceberging out. And then I just started doing the math in my head and thinking, you know, that the position, maybe I was just less confident in it based on seeing that. You know, why was someone getting out for size? Yeah, so the trade died in my eyes, at least holding it died. But I want to show you what I was talking about. If we look at Doge, and this was on Binance, let me go back, look at a 5-minute chart. It's going to group it together. You really need to look at it on like a 1-minute chart or a 30-second chart, or even less, ideally. But we can't look back that far here because it won't populate the or will it? Let's see. Let's see if we could go back to, let's use a 3-minute. No, it doesn't give us the full history. So I've gone over icebergs before on the Discord. I've put together a channel where I went into detail on them, trading them in the NQ and the ES. So this looked much different when you're looking at a much lower time frame. So whether it's a 30-second chart or a 1-minute chart, you're just going to have, you know, you're going to have 5 times the amount of bars per candle. So what was happening was there was a really clean cutoff point for price. So if you looked at this on like the 1-minute chart, it was just each candle topping out at the exact same level. So no movement through. So to a cent, right? Or it's less than that, honestly. But no movement through, just someone sitting on the bid or sitting on the offer, absorbing all buying and not letting price move through one bit. So if you're looking at price action on the low time frames, it would have looked really weird, right? It would look like a bunch of 1-minute candles having the same exact high, right? But imagine this, right? Imagine this structure, which is kind of the same high across the board, but having multiple efforts towards that level. So a bunch of wicks into it, and it being like laser-like in terms of precision, like no tick above, no tick below, all just transacting into that same exact point. So it looked really odd. But then if you looked at the actual order book in the tape, so instead of looking at a footprint, which you could use footprints too to see this, you'll see on the footprint, you'll see that the level that you're looking at where you see things really cut off is accumulating a ton of size. But what we were seeing actually, which shows up with icebergs, is you don't see a very large order on the offer in this case. So as price was moving up, as price was attacking that level, we didn't have any kind of significant size on the offer. There was significant size on the bid. So what is that doing? It's giving you the impression that there's a buyer and that what you should do is probably front run them, jump the spread, mark it in, someone trying to buy Doge. But, obviously they actually don't have any intention of getting filled. What happens is there is a small offer that is sitting at, let's say it's just 9 cents flat, right? Forget the other digits. Let's say it's 9 cents flat. And let's say that there's only 10,000 Doge offered at exactly 9 cents flat. Well, the market is trading into that. You're seeing that there's a ton of buying coming through on the tape at 9 cents, right? 9 cents flat, 9 cents flat, like strips of it. Like this entire tape will be just the same price point and size next to that. And there was 10,000 Doge for sale at 9 cents flat, but you're watching the tape and you know that we've already transacted like 100,000 Doge into that. But this is still showing 10 cents. So what's happening is it's an iceberg and it's only showing you the tip of the iceberg. So it's refreshing and adding more size as it's being chewed into. So it looks like a very small offer. Meanwhile, that offer is just the tip of that, right? A much larger position. And the only way you're able to see that is if you're actually watching a footprint or the tape and you're seeing that, or just volume. You're seeing that there's a lot more volume that's actually gone through at 9 cents flat than has been indicated on the order book, right? Otherwise, that 10, if someone buys 100,000 Doge and there's only 10,000 available at 9 cents flat, well, that 10,000 is going to be bought and then it's going to slip up the rest of the way. And you're going to buy into the book depending on how much is available. And you might get filled at a really crappy price. Or you might get filled at a good price if there's a lot more behind that initial offer. But the point was it was hidden. So I'm looking at this and just thinking, well, clearly someone's trying to get out for size. Price is going to have trouble moving through this. They're not advertising it. They're not marketing out. Maybe they're planning on taking profit over a range of prices like this. But either way, it just swayed my confidence to the point that my confidence was already swayed towards the negative anyway. So I just dumped the position. In something like in crypto, if you see that, if I see an iceberg in the bid, so if I see the bid absorbing a ton, right, that's not being accounted for in the book, or if I see it in the offer, I side with that. So what that means is I could have arguably, based on my belief, opened up a short and just sided with that, knowing that price wasn't going through that. Like little odd lots are not buying through that. And sure enough, price right after that. So this was, let's go back to it. Price had actually dumped from 95 down to 91. So not a tremendous move by any means. Is there a percentage tool? We got to get them to get a percentage tool. Not a tremendous move, right? But a good trade to go with that flow. So you spot that the heavier hand is in the offer in this case. That side is really sticky. It's not going anywhere. And in that case, either sell spot or sell futures with them, anticipating the price is going to move lower. The opposite if you spot an iceberg at, in the bid, right? Price is probably going to mark up. No one's really doing any work on this. Sometimes you'll see them get tagged, but for the most part with alts, I think you're better. And again, not financial advice. For me, I will go with that flow. Whereas with the NQ or the ES, when I see an iceberg, I almost always trade into it because 9 times out of 10, you're going to see them take it out. So in the NQ or the ES, if we were looking at this same situation and going back to that, and this is an iceberg in the offer right here, and I'm seeing that, I'm probably going to buy into that because 9 times out of 10, if someone's selling that, could be a hedge being put on. It could be a market maker. It doesn't have to be a directional trader. It could be one leg of a spread. 9 times out of 10 in my experience, the market actually pops up through icebergs in the offer and pops down through icebergs in the bid for a few points. And then you might get something where, if you have an iceberg and this level's absorbing it, I get the 2 to 3 point pop, and then the market corrects lower. And the bid would be the opposite. You have the iceberg at the low. I sell into this anticipating the pop through, and then we end up reversing after that. But in crypto, I think it's almost always better to go with the heavier hand. Like, it's a retail driven market, a bunch of odd lot traders. So if you spot a really sticky point, it's not going anywhere. Well, I mean, it's, what are you going to do to move the market?
Yeah.
So obviously Doge, I'm out of Doge completely. So let's take a look at ETH. So one thing that I mentioned, this is going back 2 days now. I lose confidence even more when ETH. So if you guys remember the stream from the other day, I talked about 1850. So the level's still there. So 1850 being the level to take and to hold above for a move to 2K. So here's the breakout above, and this is, you know, same box I had on from that last stream. That's your composite. That's your composite from going all the way back to 17 of March. ETH was trading weaker compared to BTC. So we got the pop through. Risk reward at this point. Initially, I ended up selling this on the first move up, but after accepting above and a price clearly showing signs of acceptance, I ended up longing this, anticipating we got to move to 2K. So instead, the market moved through, and BTC didn't have any really, BTC didn't have a local breakout along with it. So for me, it's not like it was a bad sign initially that ETH moved first, but it's a bad sign that BTC wasn't following at all. So it looked like sort of money coming out of BTC going into ETH, you know, as we get closer to Shanghai, and it just being a case of money moving around rather than any kind of real, you know, increase in capital coming into the market that was going to drag everything higher or mark up everything at that point. So that's never a good sign for me when ETH shows strength and BTC doesn't. You know, BTC remains range bound and ETH breaks out. This retesting the level now right away. So coming back down to that 1850 region. Again, that's not something that I necessarily want to see. This, by all means, to me, should have moved up to 2K pretty easily. But as someone pointed out this morning, Ansem, I see someone mention in the comment, when ETH BTC moves up more than ETH, while BTC is not, that's a bad sign. Basically the same thing I just said, but looking at ETH BTC. So you're looking at ETH BTC to judge the strengths or relative strength between those two pairs, right? To see where your money is best spent, honestly. All you're seeing is that money is coming out of BTC and going into ETH. And it's not a case of, again, it's not a case of capital coming in across the board, and it's a sign of weakness more than anything. So I just look at it from a price action standpoint. You know, the market marked up. I mean, it should have, in my opinion, moved up to 2K pretty easily. I mean, we're going back at this point. There's not a whole lot in the way. You know, ETH is still in a high time frame range. Bitcoin broke out. So there's already signs of weakness from that, right? I mean, by all means, ETH should be higher beta to BTC. So the move in ETH off the lows, I'm pretty sure the move in ETH off the lows is still, like, if we go back down to, when did we officially move off of the lows for BTC? Probably around the same time either way. Let's just use the beginning of the year as good measure. So from the beginning of the year, Bitcoin is actually up more than ETH, right? So that's my point. I mean, I didn't want to just go from a price action standpoint, even though you could see that clearly ETH didn't break out of its range, because this just could have had more variance. It could have had a wider range, right, in terms of percent. So ETH is was already showing signs of weakness against BTC. Is now, I still think, showing signs of weakness, right? I mean, this structure is completely different, right? So high time frame structure, low, lower low. Just to read, I'm sure all you guys already know this, and then low and then higher low, but still within that range. So yeah, it's not something I like to see. I'd rather see that Bitcoin leads through all of this. So Bitcoin led, and ETH is above 2K already, and then if ETH continues to move, we ideally want to see a bid, BTC catch a bid as well. So just not the case. It's just the concept that one is sort of benefiting at by the loss of another, right? It's capital moving around. It's money getting back into ETH now on the confidence that maybe the Shanghai event is a buy, it's a buy rather than buy the unlock rather than sell. I think that it's almost always better to assume in this market that it's a sell the event situation for almost everything. A lot of supply coming back into the market. The case is made that those are really, those are diamond hands and they're not going to sell. But I never like to extend that confidence to others. You could have said that the entire way down for some of these pairs. People were saying that, it's diamond hands. No one's going to sell here. No one's going to sell at the prior all-time high. No one's going to sell at the 200-day. And then people just continue to sell. So let's go to ETH BTC chart. So retesting the underside of this multi-month range at this point. I mean, I almost always feel like it's a sell. It's a sell. Like, I hate that mental gymnastics, jiu-jitsu. I don't know what I just said. Tea makes a big difference. I'll tell you that. Drinking tea, drink this green matcha tea. Your mouth feels like you're chewing on cardboard all morning. You can't even talk. You need like a teaspoon of honey or something. More importantly, I forgot to go over this. I'm just frustrated because I want to trade during the stream, and I don't know if you could tell. I don't really care to chart. Charting is like, that's such a small, infinitesimally small part of trading. More importantly, I had mentioned the other day that it looked like the ES was going to correct. This move up, so we have the CME data. This entire move up was on very low breadth. So what that means is the entire support of the market was not behind this. If you look at the S&P, you could attribute, because of just waiting, the S&P a lot of times to just what Apple's doing. I think Apple's like Apple and Microsoft. So both of them. Apple at number one. This move up was very thin. So it wasn't a case where we had healthy breath on the way up. And my opinion was that 4150 to 42 was the level we need to hold. So that zone, we need to be sitting above there constructively, having established a base, and then it's all hands on deck. This thing's going to continue to move up much harder. At that point, like, you have career risk for anyone who thinks that this is still a bear market. And it's not, maybe it is, right? But the point is, you're putting a lot of people in uncomfortable positions that have been sitting on the sidelines, anticipating that, things are going to get worse. And then the market at that point is broken out of every measure that you could use, because there's no objective measure of a bear market, by the way. People cling to certain things, 20% drawdown, 200-day moving average. There's a bunch of different ways, but there's no agreed upon objective measure. There's popular things, right? The NASDAQ is technically in a bull market now. All right? That can change very quickly because it's obviously higher beta. And there's a lot more movement than something like the S&P. But if we're above 42, it's like every box is checked. You know, you have to really be saying this is going to be deviation. And at that point, like, you're just continuing to make new yearly highs. So this zone is really important. But we extended into this zone with not really any kind of broad market support. So what I said was, and this actually worked out quite well, I was playing the short side on the NQ and the ES, was that we need to pull back and build that up. So that pullback zone that I mentioned was 40.50. So we're kind of chopping around there right now. But ideally what you want to see, and it might seem very insignificant, you want to see just the market continue to build structure. Continue to build structure, grind its way up. You know, that would be the best case scenario. So us continuing to hold above 4K it would be quite significant. The thing is, though, that now the market we're in a different regime. So, I mean, I don't know if anyone trades short-term here, but there's some short-term opportunities. So, for example, like the NQ on the short side, I mean, setups to be willing to take. So, you know, we're rejecting at these lows. So the lows going back to the fourth and the third. Pretty clean market structure up here. So we had a really strong move down. So obvious area where you would expect resistance. I mean, not for nothing. I think that the S&P probably moves a little bit lower. And for setups with the NQ, you know, something like re-accepting back within this little 2.5 day range, or that's like a 1 day range if you go from half of this session and then half of this session. Accepting back below something like 1380, I think you're going to be making new local lows in the NQ. And that implies obviously the S&P is probably going to do the same, even though the S&P was holding yesterday while the NQ ended up pushing lower, and that's to be expected. NQ is going to overshoot the highs and overshoot the lows. So it's going to underperform down and overperform up 99% of the time. The market is... I don't have a TPO on this chart, so until we get some profiles on this, we won't really do any kind of in-depth analysis on the NQ or the ES. Too many things to switch between on the live streams. We're now moving. It's now bad data is bad. So for 2022, it was bad data is good. Bad data means that the Fed can't hike more. Bad data means that they have to pause. Bad data means that they have to, print more money. You know, bad jobs data. They were kept mentioning a tight labor market, right? They have room to push. They could hike more. So anything that was contrary to that, so anything that showed maybe the signs of an economy that was slowing down or beginning to perform poorly, was good for price, because bulls looked at that as there is light at the end of the tunnel, right? This tightening cycle will come to an end, and any kind of update when it came to non-farm payrolls, unemployment, CPI, all of these things. CPI is obviously in its own because that's talking about inflation, but anything with respect to employment, the jobs market, GDP, all of that, bad data was good. Now it's actually we're away from that. So bad data is actually bad. Now we're starting to really price in what looks like, an obvious recession. So it's no longer the case where you can have bad unemployment data and say that this is a buy. In the short term, the market's going to respond positively to it. So I think that if we continue to have this, and tomorrow is non-farm payrolls, that we should just expect this market to correct a little bit more. It's one of two ways now, right? If we are going into a recession, and so we're in a tightening cycle, right? So if we go into a recession and inflation is coming down, right? So inflation comes down much more. That is, you can make a case for the Fed coming off, right? The Fed stopping earlier. There's a lot of disagreement about whether or not the next hike is the last, or they're going to continue to hike through the rest of the year. I don't really care. I don't want to try to predict that shit. I'll just respond and react. If inflation is coming down, then you can make a case for them maybe coming off, right? And that's because of everything that's been happening with the banks. Things are starting to show a little bit of wobbliness. But if it's a case where in a stagflationary environment, inflation is high, and then we have bad growth, we have signs of a really clear sign of recession here, and if not here, at least coming in the near future, then you can't make a case for them coming off, and risk assets wouldn't benefit, and the market would continue to move lower. I don't know if it would make new lows. The point is that they wouldn't need to come off, right? If inflation is still high, they can continue to hike. So it's a tough spot right now, honestly. But more importantly, we have switched. We've went from that regime where bad data was good, right? Good data was bad, right? Good meant higher for longer. Good meant, economy's tight, we could continue to push. And now it's the opposite. So understanding that shift is pretty important. Isn't legacy market closed tomorrow? The non-farm payroll is still tomorrow. So non-farm payroll is tomorrow at 8:30 a.m. I will probably have tomorrow's a holiday. Yeah, because of Easter, right? So tomorrow's hours would be different. Maybe the New York Stock Exchange is going to be closed, but maybe the futures market will be open. I think the futures market's open at least half the day. So I have to double check that because I forgot that this week was Easter anyway. Yeah. I think that's it though, guys. I mean, there's not a whole lot to go over, and I apologize for maybe the stream being a little dull because of that. I want to get back to the streams where I'm trading during the streams. Like I have the ES ladder right here, right? So, that's great, but I want to be able to trade crypto, trade the setups during streams, go into a little bit more of the exciting stuff, go into lower time frame stuff. Because when I'm not trading during the stream, it's really easy to just default to looking at, the obvious levels, talking about the obvious stuff that you've seen, and not to take for granted maybe what I consider obvious or what you consider obvious. But if you're on crypto Twitter, it's like everyone's talking about the same shit. We're all looking at the same prices. We haven't gone anywhere. I mean, maybe ETH puts in a multi-day range between like 1930 and so between these singles or excess up here 1930 and today's lows, and we begin to base out above that 1850 region. Maybe take another shot there towards 2K. I don't know. Nothing stands out as really exciting, so but all right, guys, I'm gonna wrap it up. I will go live again on Saturday. So we'll go live again on Saturday. Hopefully by then they'll be done with what they're working on, and we'll be able to pull up the ladders and go back to those trading streams. All right. Shout out to Cryptowatch. Platform's phenomenal, right? Even though we don't have the connection yet, it's a phenomenal platform. And I know that it doesn't have everything, right? So, I use Cryptowatch, but I'm not going to say I don't use my TPO charting software still, right? They don't have TPO. I use TPO. But Cryptowatch can absolutely take the place of many other things you guys probably use. Your trading view. And then more importantly, if you're able to trade through Cryptowatch, it's going to be much better. It's going to be a much better experience than trading on the exchange page. One, it's more reliable. So you could trade through API much more reliably than you could trade on the actual exchange website. So that's obviously that's very important. There are a lot more advanced features that you don't have access to on the website with scaling, with point-and-click trading. So yeah. All right, guys. Shout out to Cryptowatch. Shout out to Bybit. Links are below. And yeah, have a great evening. Again, apologies for no trading during the last couple streams, but we will bring that back, and we'll get back to what I want to do and what I think was a much better format. Until then, have a great Friday, great Thursday.